It's Monday, the 25th of October, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Wall Street hits a new high, bond market sell-off, inflation fears grow, but what does it all mean for everyday Australians? That's our main story. Also this morning, the Coalition does a deal on climate change, more corporate mergers in the offing, and potentially new rules that might make Afterpay and Zip Co more expensive. Then stay listening for Sean's chat to Cameron Brownjohn from Federation Asset Management about investing in ESG. But first, Sean, we are heading into one of the most important weeks from an economic perspective. Inflation figures on Wednesday, the beginning of the United Nations Climate Summit is a week away, and financial markets are nervous about interest rates.
We sure are, Michael. There's a bunch of things going on. US shares hit a new high over the weekend, helped by strong earnings and good economic data. But that was tempered by the Federal Reserve boss, Jerome Powell, signalling concern about inflation lasting higher for longer. The local share market ended 1% higher for the week, but it's still about 3% below its all-time peak. The local bourse could well fall back, but according to Shane Oliver, AMP Capital chief economist, US shares have made it to new highs, and the relative strength of cyclical plays like copper, financials, credit spreads and the Australian dollar are a positive sign that the world is not about to plunge back into recession. That's the good news. It augurs well for a rising trend in shares over the next 6 to 12 months, and the period running into Christmas is also normally positive for the ASX. When Dr. Oliver talks about credit spreads, he's talking about the bond market. 10-year bond yields, which are a predictor of what's going to happen in interest rates, have risen back to their highs of earlier in the year. That was before the latest COVID outbreak. Then this week, the September quarter inflation figures are due for release on Wednesday. They'll be critical as to whether the Reserve Bank sticks to its plan of not lifting the official cash rate until 2024. Many economists believe that inflation is higher than the bank thinks so, and it will be forced to move earlier than then. And finally this week, the COP26 climate change conference in Glasgow kicks off, and that will in part determine how much climate change will have a role in government policy.
Okay, big week. But what does it all mean for those of us who aren't in financial markets?
Fixed rate home loans are on the rise. Last week, ANZ hiked its 3-year fixed rate by 0.35%. Commonwealth Bank and Westpac also lifted their fixed rates. In fact, Rate City, a research group, said 19 lenders have hiked their 3-year fixed rate mortgage loans. And higher mortgage rates will drag on house prices. Along with worsening affordability, it definitely looks like housing price growth will slow considerably. That's not such a bad thing, but we homeowners like the idea that our house prices are rising. People with conservative investment portfolios, including their superannuation funds, could suffer because bonds will underperform. It isn't good news for many retirees who look for safe places to invest their money, and putting your money into the bank or a fixed income at the moment isn't giving much of a return. And all the talk of other countries lifting interest rates and Australia keeping them on hold puts downward pressure on the Aussie dollar. Now the borders are reopening, that's not such good news if you want to travel overseas.
Yeah, so how did markets perform over the weekend?
The local market was higher, while Wall Street was mixed. The Dow Jones Industrial Average, which measures the 30 biggest stocks, hit a new high on Friday, as did the S&P 500. It's a really big week coming up in the United States, with earnings from Apple, Facebook, Microsoft, Alphabet, that's the parent of Google, and Microsoft all due, while the September quarter economic growth figures will also be released. There was good news out of China over the weekend. Evergrande, that's the massive property group, which has $300 billion in liabilities, made its interest payments. It stays off disaster for now. Brent crude was up again over the weekend and is heading towards $86 a barrel. Gold is heading towards $1,800 an ounce, and the Aussie dollar is trading at 74.6 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, big news late yesterday. The federal Liberal and National parties have done a deal on climate change, allowing Prime Minister Scott Morrison to head to Glasgow next weekend, able to commit to net zero carbon emissions by 2050.
Yes, a majority of Nationals agreed to a net zero deal yesterday after the Prime Minister made it pretty clear he was committing Australia to the target with or without the junior coalition partners' support. Nationals leader Barnaby Joyce last night said it was better for his party to stay inside the tent. In return, the Nats have won a regional economic package, including skills and job creation programs and other support for regional industries, including manufacturing, transport, infrastructure, forestry, fishing and farming.
I tell you what, it's been a long time coming.
Oh, it sure has. Climate change has been a very difficult issue for the Coalition, for a couple of decades really, because of the costs it imposes on rural and regional communities. And even now, some Nats aren't happy. The Prime Minister, however, was very upbeat last night after a full weekend of negotiations, claiming that only the Coalition could be trusted to deliver a plan to achieve net zero emissions by 2050 that will protect and promote rural and regional Australia. He's also likely to announce an upgraded projection for 2030 in the next couple of days.
Okay, so now that the policy's been decided, does it matter in the run-up to the next election? Most pundits believe it's going to be early next year.
I think it does. The Coalition was looking decidedly old-fashioned, particularly given many other nations, including China, Russia, the United States, the United Kingdom, the European Union, have all committed to net zero. Over the weekend, even the world's biggest oil producer, Saudi Arabia, committed to net zero. And the government certainly needs some help. The latest news poll in The Australian shows that nearly 50% of voters believe the government should prioritise emissions reductions. That's about double the level of 3 years ago.
Sean, there's plenty going on in the COVID world. I, for one, am still quite excited about the reopening of international borders announced last week. Not that I'm going anywhere, but it's just nice to know that you can.
Where would you go?
Oh, somewhere. I'm still leaning towards Fiji.
We're planning Tokyo. I'm not even sure that was one of the cities, but I think Tokyo will be fairly soon.
Oh,
so
that would be the dream. Are you going skiing?
No, definitely not. I want to go and see. I've never been to Tokyo. People say it's an amazing place. That's where I want to go.
Well done.
Anyway.
We are rapidly becoming a travel podcast. Let's get back to business.
The reopening of state economies continues. Victoria is expected to reach 80% full vaccination next weekend, and that means free movement within the state. Premier Daniel Andrews over the weekend said at 90%, and that's expected around November 24, the state would be close to normal. He said he wanted to see a crowd in excess of 80,000 at the MCG for this year's Boxing Day test between Australia and England. Wouldn't that be a great thing to see? The state recorded 1,935 new cases yesterday. New South Wales recorded 296 new infections yesterday. The state's at a 93% one-jab rate, and more than 84% of residents over the age of 16 are fully vaccinated. Pretty remarkable. Premier Dominic Perrottet yesterday also launched a new advertising campaign to boost the tourism sector. The ACT recorded 9 new cases yesterday, and Pfizer came out on Friday and said its COVID-19 vaccine was more than 90% effective for children aged from 5 to 11. Great news.
That is fantastic news, isn't it? Now, there was another big deal, Sean, announced on Friday with rail operator Horizon saying it would spend $2.35 billion to acquire One Rail Australia from Macquarie Group.
Yes, the total value of deals announced just last week, Michael, was close to $9 billion. Incredible.
Wow.
Horizon said it will buy the bulk freight business, adding the Northern Territory and South Australia to its logistics business. There's also another one on Friday, the $1 billion breakup of engineering group Cardno. Now, Horizon is another company you don't hear much about. It's Australia's largest rail freight operator and transports about 250 million tonnes of mostly commodities each year. Used to be owned by the Queensland government, it became QR National when it listed in 2010, and then subsequently has become Horizon. It has had a tough time of it though, with its share price now back to 2016 levels, not helped by a 6% fall on Friday.
Now, I mentioned this one earlier, Sean. The Reserve Bank says buy now, pay later companies such as Afterpay and Zip Co should remove rules that prevent the cost of their services being passed on to consumers.
Pretty interesting this. The central bank on Friday released the conclusion of its review of retail payments regulation. It's responsible for that in the economy. Now, according to the central bank, the system, in most regards, provides high-quality services to consumers and businesses and is relatively low cost, with the average cost of card payments down significantly over the past couple of decades. But it thinks it's time to move on the buy now, pay later sector. One of the selling points of buy now, pay later transactions is that the merchant, not the consumer, pays the fees. In fact, Afterpay says the service is free to consumers as long as they make their payments on time. But the Reserve Bank is now stepping in and saying the industry needs to lose that no surcharge rule. The Reserve Bank says it's been told by merchants that buy now, pay later is essentially a payment offering, but the high cost of the service is pushing up their payment costs. The buy now, pay later groups, Afterpay and Zip Co particularly, will fight this one hard. Watch this space, Michael.
Will do. Now, there were media reports, Sean, over the weekend that the New South Wales Liberal government has proposed cutting back tax breaks for capital gains. This is largely in an effort to reduce investor speculation and also then to make housing more affordable.
It's an interesting one. This is pretty much what federal Labor took to the last election and is very much against the federal Liberal policy. If you hold an asset, such as a property or shares, and you hold that for more than a year, you get a 50% capital gains tax discount. It's a really big driver for investors, and the New South Wales government won't win any friends trying to abolish it, even if it is sensible economic policy, and I suspect it might be. Remember, Dominic Perrottet, the Premier, is the person who wants to abolish stamp duty on home purchases and replace it with a relatively small annual land tax. That's one investors do like. Mr. Perrottet is proving to be quite a reformist thinker on tax policy, no doubt about that, and liberal in terms of opening up the New South Wales economy. He's only been in the job for a few weeks, but he is making his mark.
Okay, Sean, what's making headlines in today's news media?
The Australian is reporting that retailers and restaurant owners are struggling to fill hundreds of thousands of job vacancies ahead of the Christmas period, as industry bodies call on the Morrison government to open up international borders to ease the pressure of the country's worst worker shortage in 2 decades. The Oz is also reporting that US private equity giant Blackstone is preparing to take a $1.7 billion stake in the listed Dexus Australian Logistics Trust. Yet another takeover going on there. And the Financial Review is reporting that Australia Post will spend $400 million to boost parcel operations around the country after a 32% surge in volumes over the past 2 years and ahead of the Christmas period. One for you, Michael, that one.
Thank you very much. Running through some of the other stories around today, News Corp boss Robert Thomson was before a Senate inquiry into media diversity on Friday. He said the big tech players like Google and Facebook were publishers and they lacked accountability for what they published, unlike traditional media players. He would say that, of course, but maybe he does have a point.
Perhaps he does, I think. One business that has suffered during COVID is waste disposal. Cleanaway's AGM was held on Friday. That's the biggest waste disposal group in the country. And boss Mark Schubert said earnings were down around $4 million a month during lockdowns. Mr. Schubert said things, though, were picking up again.
Now, this next story, Sean, has pretty much everything. It's got a movie star, it's got a billionaire, it's got the hot property market all in one. Australia's second richest person, Andrew Forrest, and his wife Nicola have bought the property belonging to Olivia Newton-John up at Byron Bay. This is her wellness retreat for about $30 million, according to media reports. Apparently, it is the Forrest's first foray into accommodation, and it's certainly one to make some headlines.
Good luck to them.
Absolutely. Now, what's the key overseas news this morning?
Well, Russia reported more than 1,000 COVID deaths in a 24-hour period over the weekend. It's now Europe's hotspot, mostly because of its low vaccination rates. Its main vaccination is the homegrown Sputnik 5, and the vax rate is only 36%.
That's pretty low considering they were one of the first countries to start vaccinating. Remember how early they started before any of the testing really seemed like it had been finalised.
Yeah, and Vladimir Putin has run big campaigns trying to encourage people to get vaccinated, but the Russian population are just staying away from it. Interesting.
Oh gosh, yeah.
And finally, the United Kingdom and the European Union are still locked in talks over trade rules for Northern Ireland, all part of Brexit. Both sides said that they have made progress, though there are still substantial differences. This could go on for a while.
Yeah, could well do. Now, up next, Sean, is the Daily Interview, and today you're speaking to Cameron Brownjohn from Federation Asset Management.
Yes, we look at how Cameron invests in ESG companies and how he thinks about the opportunities in that space. Really interesting.
Yeah, sure is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. While you're there, of course, check out a couple of other podcasts. The Week Ahead with Stephen Koukoulas. You mentioned before, Sean, just how big this week is. So really good way to catch up on everything that's coming up this week with our resident economist. And the Sunday edition, it might be Monday today, but make some time to go back and have a listen. It's a look at the lighter side of business news. And we talked about a lot of different topics yesterday, Sean. But the one thing that I took away from it is that you have 30,000 unopened emails in your inbox.
Yes, very true, Michael, very true.
Just extraordinary. So you'll find all of those podcasts in the Fear and Greed playlist or at fearandgreed.com.au, where you can also sign up for our free daily newsletter. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 25th of October. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.